So I want to go into the S Corp conversation as we leave the LLC conversation. An LLC is the business designation. An S Corp is a tax designation. You must first be an LLC or a C Corp. And I don't talk much about C Corps because it's not really necessary in a lot of cases, particularly for small business owners, and that's who I mainly speak to on this page. And so for an S Corp, which is a great option once you're out of the LLC space, you avoid self-employment tax. Okay, self-employment tax can be a huge burden on small business owners. All right, this doesn't apply to my real estate investors because most of you report your rental income on your personal tax return in the form of a Schedule E. What I do want to address though is when you should S Corp. You should S Corp when you can afford to pay yourself a salary as a member. Now, S Corps cannot have more than 100 shareholders, but again, for the most part, small business owners don't have to worry about that, right? Most people are single or dual member shareholder S Corps, okay? So LLC has members, S Corps have shareholders. And people designate an S Corp, again, you have to be an LLC or C Corp. Again, I don't talk about C Corps, but for the most part, you must be an LLC first. You have to form the LLC because that is the business designation, and then you elect the tax designation. And you only do so when you can afford to pay yourself a reasonable salary. And you're going to ask, what is reasonable? Reasonable is usually a comparable to other businesses in your industry with similar like sales, okay? And we do go over in the mastermind how you define this. A lot of times people will say, well, my CPA or my preparer said once you're making 50 grand. Now, do some people get away with that? Absolutely. But I'm always going to speak from an audit preventative standpoint in the most strictest scenario because some examiners, particularly in small business self-employed division, are very, very, very harsh, right? And they will tackle or debate that amount for most small business owners because they can't afford representation. And that's another topic, right? That's a vulnerability that most of us have because representation is really expensive. And so I'm here because I want to get in front of these items that might cause an audit or trigger an audit. And so once you can afford to pay yourself a salary, you must get on payroll. Payroll. That means hiring a payroll company. And it's not that complex. I know it seems complex, but it's as easy as, going to ADP or Gusto. I do have a referral link. You can DM me for the referral link and get a $100 gift card when you run your first payroll. And what happens is you link your business bank account, keyword business bank account, and you can run payroll manually or you can just set it up to be recurring. But you set the salary, and the salary is determined by the benchmarks, right? And I show you how to do that in a mastermind. And that is the safe way because if you're ever in an exam, you can pull out these benchmarks as a third-party source, right? So my foundation is audit, right? And my niche is tax. So I'm always going to present a way for you to present third-party information so that there's no conflict of interest, right? There's no bias involved. And I myself am 100%, audit. I have a 100% audit success rate. I was audited last year for 2022 in 2024, and I came out clean because I am what I teach, right? I am the former examiner. I was a former revenue agent in large business and international division of the IRS. I have 20 plus years in audit, accounting, and tax. So you'll never hear hype from me because I am speaking from the person that's going to scrutinize you, right? And I make sure I kind of shield my students, if you will, and give my followers some information to shield themselves. And so why people want to S Corp is because they want to avoid self-employment tax, but a lot of people will ask me, oh, I have to pay employer taxes. Employer taxes are usually not as bad as self-employment tax, and self-employment tax is what I call a sunk cost. There's no benefit. You can't deduct self-employment tax, but you can deduct employer taxes, right? So if you're paying $3,000 a quarter in employer taxes, that's $3,000 you get to deduct on your tax return for your business, and it reduces your business taxable income along with your wages, right? You will get a W-2, okay? I want to stress that you must be on payroll. Transferring money from your personal account to your business, from your business account to your personal account, is not payroll, okay? That's an owner's draw. Okay, and you can do an owner's draw as much as you want because you're going to have to report all your income no matter what. So you can shift it here and there if you would like to. You can contribute money from your personal account to your business account if you need more, capital to operate, and that's fine, right? I would just transfer the money, and in the memo, right, when you do the transfer, just put capital contribution and whatever quarter you're in or whatever month you're in, and then you can pay yourself back. You don't have to do a loan. We'll go into that later. I make things simple, okay? So yes, self-employment, tax is not tax deductible. It's a sunk cost. Employer taxes are tax deductible, and they're usually a lot lower than self-employment tax. Self-employment tax kills a lot of small businesses, and it's a lot of times you're making enough money or enough profit or revenue where, one, you can't afford to run payroll, okay? And two, when you're running payroll, you now can contribute to a SEP IRA or solo 401k, and that's going to be another topic. You can contribute to one as an LLC. It's just a different calculation, or a sole proprietor. It's just a different calculation. So if you want to learn more, I have, revamped the mastermind. It is slashed in half so that it is more affordable to those small business owners who are ready to get started, my real estate investors who are ready to get started, and if those who are thinking about it. And it is tax deductible. So go ahead and click the link in my bio. I've slashed it temporarily. Enrollment will close at some point because I need to handle the students that are coming in, and I hope to see you there.